You've probably heard the name BlackRock before. They're a financial titan, wielding more economic power than most countries. But how did one single company get to be so central to, well, everything? The answer is actually a pretty wild story. Let's get into it.
Okay, let's just start with a number that's almost impossible to wrap your head around. $10 trillion. dollars. And to be clear, that's not what the company's worth. No, that's the amount of money it manages for other people. It's a number so huge, it literally dwarfs the economies of entire continents. So, that's the big question, isn't it? How on earth did one firm end up managing so much of the world's money? Well, you might be surprised to learn that the story doesn't begin with some massive success. It actually starts with a colossal failure. Yeah, to really understand BlackRock, you have to go right back to the beginning. And what's so fascinating is that its entire philosophy, its very DNA, was forged not in victory, but in a really significant loss. So get this, before he ever started BlackRock, the CEO, Larry Fink, was this hotshot trader. And he lost his firm $100 million in one quarter because of a bad risk calculation. That painful, expensive lesson became the absolute core of BlackRock. From day one, the company became obsessed not with chasing crazy returns, but with managing risk. All right, so here's the quick history. It all kicked off in 1988 as part of the Blackstone Group, and they were laser-focused on bonds and risk analysis. A few years later, in '94, they split off and became their own independent company, BlackRock. And then, the 1999 IPO, well, that gave them the cash they needed for the global takeover that was just around the corner. BlackRock was already growing at a really nice clip, but one strategic move, one single acquisition, was about to completely change the game and launch the firm into a whole other league. Now, think about this. The year is 2009. The entire financial world is basically on fire from the crisis. And what does BlackRock do? It makes its biggest, most audacious move ever. It buys Barclays Global Investors. This wasn't just another deal. It was an absolute coup. And it was all about one revolutionary product that BGI had in its pocket, iShares. So what in the world is an ETF? Well, think of it like a shopping basket. Instead of buying individual stocks one by one, you can buy one share of an ETF and get the whole basket, like the entire S&P 500, in a single, low-cost transaction. And the iShares business that BlackRock just bought, it was the world's leader in these funds, and it was perfectly timed for the massive wave of passive investing that was coming. And just look at this chart. It tells you everything you need to know. Getting their hands on iShares was like strapping a rocket to their assets under management. The growth after 2009 wasn't just steady, it was absolutely explosive. This one deal cemented them as the undisputed king of the asset management world. But it wasn't just smart acquisitions. BlackRock had a secret weapon humming away behind the scenes, a powerful technology platform that kind of acts like the firm's all-seeing eye, and it's called Aladdin. Now, Aladdin isn't just some software that BlackRock uses internally. You have to think bigger. It's more like the operating system for a huge chunk of the global financial world. They actually license it out to their competitors, to pension funds, even to governments, which gives them this incredible, unprecedented view into the entire market. So how does this thing even work? Well, at its core, first, Aladdin gives you a complete bird's-eye view of an entire portfolio. Then it runs thousands of stress tests and what-if scenarios to model every possible risk. And finally, it helps manage the actual trading and make sure everything is compliant. It's really an end-to-end system for managing massive amounts of money with incredible discipline. So you've got this incredible scale and this technological fortress. You'd expect BlackRock itself to be a pretty good investment, right? Let's take a look at how the company, stock ticker BLK, has actually performed for its own shareholders. And yeah, this table tells a really compelling story. You see, while the broad market has its ups and downs, BlackRock's business model is based on fees. It creates this super stable, almost subscription-like revenue stream. And what that's led to is strong outperformance over the long haul and, as you can see, consistent dividend increases. That's the sign of a very confident, very healthy company. This quote here really gets right to the heart of the whole company's mindset. Larry Fink has said time and time again that BlackRock sees itself as a fiduciary, basically a steward of its clients' money. The focus is always, always on long-term sustainable value, not on chasing some short-term market fad. Okay, so we've looked at the history, the tech, the philosophy. What are the big takeaways from BlackRock's incredible rise to the top? What can we learn from all this?
So, what have we learned here? Well, first off, in the world of finance, scale is a massive, massive advantage. Second, managing your downside, your risk, is every bit as important as chasing returns. Third, patience really is a virtue. And finally, in today's world, the best technology creates a protective moat that your competitors just can't get across. And that brings us to the final question. BlackRock's story is really a masterclass in how you combine scale, technology, and a long-term vision. So, what can their discipline and their patience teach all of us about how we should be approaching our own financial futures? It's definitely something to think about.